Okay, looks like we're going. My name is Joe McGivern. I chair the City Council's Finance Committee. We are via Zoom, being telecast live on Channel 15, and our meeting is also being streamed. The members of the committee this evening who are present besides myself are our Vice Chair, Councilor Tallman, Councilor Leahy, and Councilor Sullivan. We will be joined, I believe, shortly by Councilor Bartley. Other members of the City Council who are present via Zoom, Councilor Bacon, Councilor Murphy, Councilor Graney via telephone, and Councilor McGee. I think I got everybody at the moment. We'll let people know when others join us. We have two items and a very special guest this evening. But first with us to join the discussion is our city auditor, our sheriff, so to speak, Tanya Dojek. And our special guest this evening is from Melanson and Heath. Melanson and Heath has been the independent outside auditor for the city, I think, for 3 decades now, if I'm roughly in the ballpark. And this evening, Campbell, who has been assigned to us for at least the last 4 or 5 audits. Am I correct?
Yep, I've worked on the city's audit for probably almost the entire time I've worked for Melanson, so close to 15 years, but in different capacities, kind of over the years, on and off. So,
well, we welcome you this evening, and before we get started, just let me go to the agenda. Item number 1 is the fiscal 2019 final audit report. That report, we remind everyone, we received some time ago. Copies were sent out electronically. This past week, I asked Jeff to send out the electronic copies of it again. Hard copies were made available. The report itself, I believe, is 72 pages, but as we usually do, there's a management letter that accompanies the report, and we usually get into the management letter. Now, this, you might think that it's 2019. It's you don't want to call it stale, but it is something that is gone by. But more important, it's the progress of the way things work out. Currently, the 2020 is being worked on. In the second item, after, not up for discussion yet, we will go into the certification of free cash, more recent. So with that in mind, I invited both our auditor and Tanya to make a presentation for us this evening on item number 1. If I could have a motion to take item number 1
off the table.
A second.
Motion made, seconded to take item number 1 off the table. All those in favor? Any opposed? We're joined by our other member of the Finance Committee, Councilor Bartley. So Tanya, it's up to you how you want to do this. Okay. We're looking for the management version of the 2019 report, and after we do that, we'll go into questions and answers, or however you wish to do it, and then we can get into the certification of free cash, more recent.
Sure. So I have a PowerPoint presentation. You have to bear with me a little bit because, this always, let's see if I get it to work here. In the world of, can you see the presentation?
Yes, we can.
Okay, just the full page one, not the Cliff Note one?
We got both right now.
Both.
Okay. All right.
Never share your Cliff Notes.
Well, there's no notes on it. I just, all right, let's try this. All right, is that better? Can you just see one now?
Yep.
Yes.
This one.
Okay. See, it never works out quite on the first try, but we're learning in this world of remote presentations. So I know we have a lot on the agenda tonight. I wanted to just briefly start by giving an overview of the nature and the purpose of a financial statement audit in terms of, and as well as the roles and responsibilities of us as the independent auditor, management's responsibilities, and the finance committee's responsibilities. And then, as Joe mentioned, the financial statements are from 2019, but I did want to talk on some of the key numbers in the financial statements themselves, and then review some of the comments in the city's management letter, and then lead into the discussion of the 2020 free cash certification. And just feel free to stop me at any time if anyone has any questions as I'm going through this. Now, in terms of the responsibilities as Melanson as the independent auditor, our ultimate responsibility is to express an opinion on the city's financial statements. In order to do that, we're required to plan our audit to provide reasonable assurance that the financial statements are free of material misstatement. As I'm sure most of you are aware, an audit does not provide 100% assurance. We don't come in and pour through every single transaction. We don't look at every single balance. It's not feasibly possible, and that's not how audits are designed to be set up. Instead, our audits are conducted under a set of standards known as government auditing standards. And those standards require us to use a concept known as materiality. Now, materiality will vary based on the size of the entity, and also varies based on the different funds of the city itself. And in fiscal year 2019, the materiality for the city's general fund, or your main operating fund, was about $800,000. Now, that doesn't mean we don't look at anything below that amount, because we certainly do. It just means that the standards say we should plan to perform our audit to focus on balances at or above that level. Now, in terms of management's responsibilities as part of the financial statement process, management is ultimately responsible for the financial statements themselves. They're also responsible for establishing and maintaining effective internal controls and ensuring that the city complies with all the laws and regulations that are applicable to the various activities of the city. As part of the audit process, management is responsible for providing all information and financial records to us in a timely fashion so we can conduct our audit. And at the end of the audit, they're responsible for providing us with a letter that confirms representations that were made to us as part of the audit process, that they, what they told us, or documents that were given to us, were true and accurate to the best of their knowledge. And one thing to keep in mind, that at the end of the day, an audit does not relieve management of its responsibilities in terms, in regards to the financial statements themselves. Now, as part of the responsibilities of the Finance Committee, the Finance Committee is responsible for assisting the City Council in the oversight of the financial statement process, as well as oversight of internal controls and the risk assessment evaluation process as part of the city. Just, being aware of where there's potential risks or issues, that is, part of your day-to-day operations as well. You're also responsible for educating other city council members on the understanding of the financial statements and reviewing the management letter recommendations made as part of the audit process. Now, in terms of the financial statements themselves, and Joe mentioned they are, close to 70 pages long. They are presented under rules established by the Government Accounting Standards Board, which is also known as GASB. There are essentially 5 different components to the financial statements themselves. The first one is the audit opinion, which is the only part of the financial statement that actually belongs to us. Just those couple pages is really what we're responsible for. The rest, as I mentioned before, is the responsibility of management. In fiscal year 2019, we issued a couple different opinions on the financial statements, and this has been the same as prior years as well. Because Holyoke Gas and Electric is technically a component of the city, but it's not included in the city's financial statements, we issue adverse and qualified opinions on the portions of the financial statements that would have included that entity. In terms of the other operations of the city, what are known as your governmental activities and the other major funds, so your general fund, we issue unqualified opinions, which means that based on the results of our testing, we feel that the city is in compliance with generally accepted accounting principles. So after that comes management's discussion and analysis, which is kind of a brief overview of the components of the financial statements themselves, as well as some of the key numbers and results of operations from the past fiscal year. And then you have your two sets of financial statements, your government-wide statements and your fund basis statements. And we'll kind of take a look at one of each of those in a few minutes. And lastly, you have your footnotes and your required supplementary information, which provides more detail and explanation on the numbers that are actually reported in the financial statements themselves. So much more detail and notes on those. Now, I'm not sure if people have the financial statements printed out with them or if they're looking at them on the screen. The first page we're going to look at is page 16 of the printed document. It's page 18 if you're looking at a PDF version. I just wanted to talk about some of the numbers on the statements themselves. This is a brief snapshot, and I'm not. Hopefully you guys can see the actual number because your pictures are over what I'm looking at here. But this is a snip of the balance sheet, which the balance sheet is one of your fund basis statements. So these statements more closely resemble the city records, how the books are kept on a monthly basis, and any kind of monthly reports you would receive from Tanya, the city auditor. Now, the column that we're looking at, it says general. It is the city's general fund, but it also includes the stabilization fund balances. A few years back, there was an accounting standard that required cities and towns to report your stabilization fund along with your general fund so that it more closely aligned how the states actually report their rainy day fund, which is part of their general fund. So the number I have boxed there, the unassigned number of just over $14 million, that's made up of two components. The majority of that, which is just shy of 13 million, is the city stabilization fund, which at the end of 2019 represented about 24% of the city's tax levy. That's, the balance in the stabilization fund is very healthy. DOR recommends, anywhere upward of 10% is, a good goal to have set aside in the stabilization fund. So, being 24% of the city's tax levy is a fairly healthy balance in that fund. The remaining portion of that number is the city's general fund unreserved number. So that's, what's left in the general fund after you've set money aside for, carry forwards, things, current year budget items that weren't spent, things along that nature. It's what's available. And it's essentially like the starting point for the city's free cash calculation. That number was just, yeah.
Tanya, I have a question. This is Sergeant Hart. I just wanted to, you said that these numbers represent the end of 2019. Is that the end of FY 2019?
Yes, as of 6/30/19.
Oh, okay, so it's not current to the FY 20, correct?
No, we can take a look at that a little bit. I have the general fund unreserved number as of 6/30/20 as well.
Okay, thank you. I just wanted that for clarification. Thank you.
Yeah, no problem.
Tanya?
Yeah.
Tanya? It's Councilor Graney.
Yeah.
Go ahead, Councilor Graney.
A quick question. The bottom figure, 426,751 certified free cash. What is the optimum percentage that's healthy as the stabilization fund? You said 10%.
That is a negative figure.
Yeah, that's a negative $428,000. DOR recommends anywhere between 3 and 5% of your operating budget is an ideal number for free cash to be certified at.
So then we're way behind on that figure.
Yeah.
Okay, thank you.
Joe, can I interrupt and
Counselor
ask?
Sullivan?
So, Tanya, in the past, I recall hearing a number, and I don't know who we were talking with at the time, that as far as the stabilization number goes, what the bond rating agencies look for is 10% of the city budget. And now we're looking at 24% of the tax levy.
Okay.
So which is the right way to look at it? First of all, as to what is a healthy stabilization fund?
Right. Well, I mean, that's a good question. I mean, different entities have different benchmarks. You know, your city budget itself is 149 million, somewhere 46 million.
I round it to 150 all the time just for easy math.
Well, that's true. That is good. Right. So if you're looking at 10% of your budget, you're right around there. You're a little shy of that number. You know, there are a lot of different metrics that different entities use to look at that. I would say either way, it's a healthy balance from either perspective. I've looked at it both ways, and I don't know.
Okay. Is there a such thing as an excessive amount? I wouldn't think so at this point in time. I don't think I've ever seen a city or a town with an excessive amount in their stabilization fund. Obviously, it depends on everything else that's going on in the town as well. I think there's a lot of different factors in that. Well, I mean, to the point where maybe it should have been used to lower the tax rate, or being applied for other things that we might be borrowing for, or something else. Instead, at some point, you reach a point. And the reason I'm saying this is right now we're looking at numbers that really we're almost 2 years old, right?
Yeah, 18 months old. Yeah.
And right now, our current stabilization fund is at, I believe, Joe, you can correct me on that, 16 million and almost 15.7, I believe.
Tanya's with us. I think it's under 16, but.
I think it was right around 15 million.
The other night, you just did it. I believe it was 14.
Yes.
Something. Yeah.
So, I mean, if that's the case, and I believe our budget was still around 150, and we're at 15, well, that's our budget. Our tax levy, I don't know what that number was. That one I don't know off the top of my head, but I would guess that pushed us up somewhere in the 33% neighborhood then.
Yeah, I mean, your taxes are, fairly small in relation to your total budget, because you do get a lot of state aid. So
well, chapter 70, is the bigger part of the budget when you put everything together.
Yeah.
And chapter 70 is educational formula. We don't call it state aid, even though the state likes to call it that. But it's our money coming back to us to take care of a community that is that is at the highest per capita low-income families in the Commonwealth. Right. And one community doesn't pay for the education of low income, the entire state does. And that's why our chapter 70 dollars are higher. So the 24% of the tax levy is just a small portion of what the revenue is that pays for the budget itself.
Right.
I get that, but as far as what percentage of stabilization is of our tax levy, we've got to have dramatically increased then from that 24% number. We must be somewhere north of 30% at this point.
Yeah, I don't know what the levy is off the top of my head in fiscal year 21. It's just shy of 54 million in 2019. So.
Councilor Sullivan, it's a good question. I understand not where you're going, but I understand the question. But I think we have to get rid of fiscal year 2019 and then get into item number 2 and then start asking questions about where are we currently?
Okay, I'm fine.
Thank you. Tanya?
Okay, so I have any other questions regarding these amounts? The next page I wanted to touch on briefly is kind of a portion of your statement of net position, which is page 14 of the financials and page 16 of the actual PDF itself. Now, the previous page was looking at your fund basis statements. This is a piece of what are known as your government-wide statements. And the purpose of your government-wide statements is to take your municipal operations and show them like a business. So these statements consolidate the different funds together of the city and only distinguish between governmental activities and business type activities. So your governmental activities are your general fund, your special revenue, your grant funds, your capital project funds, like all of those get grouped together. And your business type is your enterprise, which is sewer fund, your sewer fund. Now, the purpose of these statements is to show the true assets and liabilities of the city. So we take your fund basis statements, which we're just looking at, and add items such as your capital assets, your long-term debt, your bonds payable, as well as your net pension liability and your OPEB liability. And I wanted to just talk briefly about the pension and OPEB liability, since they're generally the largest liabilities that we see on a set of financial statements. First is your net pension liability, which was a little bit over $104 million at the end of 2019. And that liability represents the city's share of the retirement system's unfunded liability.
So, Councilor McGivern, if you could just ask her what is an average compared to a city of our size?
That will vary slightly. So you're part of the whole retirement system. A lot of other cities are part of county systems, and it hinges kind of on or a number that we look at is what percent funded is the system itself. So the Holyoke Contributory Retirement System is just shy of 65% funded at this point in time, which is average in terms of the percent funded. We've seen some up in the 70s and some kind of as low as like the 50s. So it's doing fairly well. And that percent funded is going to factor into what the liability is on the city's financial statements. So, and as a city, you represent the majority of that system. There are other members of that system, but you represent them almost 69% of the total system itself. So you.
Okay, thank you.
Yeah. So I guess it's average for a city your size, I would say. I mean, there's so many factors that go into it. I don't know if there's really a benchmark, just because of all the systems are so much differently funded, I guess, in terms of what their funding status.
So, Tanya, are any cities in the Commonwealth right now 100% funded?
Their pension liability?
Yes.
Not that I know of. I know there are some that are pretty close, but not that I'm aware of.
Okay, thank you.
No. The other number on this page is the OPEB liability, which is just over 220 million at the end of fiscal year 19. Now, this liability represents the city's share of the retiree health insurance costs. And while unlike the pension liability, there's no requirement to fund the liability at this time. And the city has not set up a OPEB trust fund to set aside money to that would offset this liability. Currently, you're the only city or town that we audit that does not have an OPEB trust fund and has not had one set up. I don't know if there's been discussions as part of with the bond rating agencies about this or not from the city side. Something, on the wish list of things that would probably be a good idea to do to set up a trust fund and start putting money aside into that. It is a reserve, so similar to a stabilization fund, it is a little more restricted in use than a stabilization fund because it can only be used for retiree health insurance costs, but something to think about. Does anyone have any questions on those two?
Tanya, the trust fund,
Yes.
the mechanism to set it up, would the mayor have to initiate it? And then appropriate monies for it?
Yeah, you would have to adopt the Massachusetts general law wording to adopt the trust fund and set it up, and then you could vote to put money into it, but you have to vote to establish it first. There's a standard wording that all the lawyers have that have to be presented. It has to be adopted, and there's certain wording and stuff like that.
Thank you.
Mm-hmm. You're welcome. Okay. Did anyone have any other questions on the financial statements themselves?
I have one other question. We could go back to that last screen for a minute.
Sure.
So as far as this, a trust fund for the OPEB there,
Yeah.
what would be a recommended percentage, just like we have, 24% in the other one? What would be for a stabilization fund for that? What would they be looking for?
At this point, they're really looking for any kind of contribution, I would think, to the OPEB trust fund. Cities and towns across the state are all over the road in terms of how much they have set aside into the OPEB trust funds, because there's no, like I said, there's no requirement to fund it. So everyone's kind of on their own in terms of how much money they want to set aside into that fund and how much, put it lightly, how much they care about putting money into the trust fund. Some have done a certain percent of a certain type of receipts and set aside a little bit of that. Ideally at this point, if the city was comfortable with how much they have in their stabilization fund, you could kind of switch gears and put some money into an OPEB trust fund, along with the stabilization fund, kind of split it up if you're going to put a little bit into your savings accounts or your reserve accounts.
Well, I mean, 220 million, that's a big fat number. What percent? Are they talking about a recommended number of 1%, 10%, 5%? Or is there no foundation at all? It's just...
Yeah, I haven't seen any foundation, and honestly, I've seen, anywhere from 5% funded up to, 50% funded. It's kind of all over the road, like I said, in terms of, the town's, so your town's preference on what they want to put aside into that fund.
Did you say 15% or 50%?
50. Some are up into the 50% funded already. But most are not, to be honest, most are not. And you have a very, very big liability. But once you start contributing to it, it exponentially kind of decreases that liability, the way the actuaries calculate how long the funds you're putting in are going to last, and if you continue putting in those funds. So there is like a, rate of return and full calculations that the actuaries do. So
Okay,
That's playing into that. Yeah,
thank you.
you're
Joe,
welcome.
Joe?
I'm sorry, I got a limited screen. Who's that?
Right here,
Counselor
Pete.
Plowman?
Yeah. Yeah, Tanya, how does that affect, I mean, that amount, is that just keep on growing every year, the OPEB liability?
Yeah, it goes up and down depending on a couple different things. You know, your retirees and your active employees aren't changing a ton, so that wouldn't really affect it. What the big factor is, because you don't have any money in the trust fund, your rate of return is set based on the municipal bond rate as of the end of the year. Now, that will vary, and between FY19 and FY20, thanks, you know, I'm sure partially to the pandemic, that number dropped a good amount. So like next year, if we're looking at this number, it's going to go up, that liability, because your rate of return is going to go down for, you know, long-term, or your discount rate, I guess is what it's called. So that's playing the biggest factor into your liability right now. I mean, it's based on, you know, your benefits, how much health insurance costs, if you pay 80% of retirees health insurance or 50%, like all those kind of things factor into it and are part of the calculation from the actuary. But because you don't have a trust fund, the discount rate is the biggest driver there.
So that's basically for future retirees, basically like health insurance for the costs that it would be figured into the next big 20, 25 years.
Yeah, yeah.
So is that why some communities don't really bother putting anything into there, or because it's something that's down the road and they don't want to knock it down, or?
Right. I mean, you pay your retiree health insurance on an annual basis. It's considered a pay-as-you-go liability. So you're paying your current costs as they come due. A couple of years ago, you know, GASB decided that, you know, you really do have this cost you've committed to, since you're telling your retirees that you're going to pay for X% of their health insurance. So, you know, in order to kind of recognize that liability, the actuaries calculate what that would be based on your current employees and your retirees, and this is what you're going to be paying in retiree health insurance costs as of, you know, for everyone that you currently have in your system right now. Yeah.
Okay. Thank you.
It's a big number, and it's a big number everywhere. But you know, something to just keep in mind.
Think about.
Yeah.
I appreciate it. Thank you.
You're welcome.
Quickly,
Counselor
Joe,
Green?
if I could. Yeah, who controls that fund? Who's in control of that fund? The OPEB liability? Is it each individual community? Is there an overseer, an actuary? Who controls it? The state?
It's not a fund. It's there is an actuary that calculates what that liability is based on data that's sent from the town. So they send a list of all your retirees. They send a list of all your current employees and what the costs are, and salaries and things along that nature. And the actuary calculates what that liability is based on the different assumptions that they're required to factor in. So it's literally a report from, you guys use Siegel Actuaries, and they, you know, list the number out, and that's what the liability is. There's no fund, there's nothing set aside or anything like that, and there's really no overseer kind of that at this point in time.
So basically, what's the purpose? What's the purpose of it?
It's an accounting standard that they issued a few years back, and because GASB felt that, you know, you have this commitment to your retirees and to your current employees that you're going to pay that, so you should recognize that in your financial statements. You know, similar
but that already exists. That already exists.
You mean your annual cost to pay
Yeah,
retirees?
yeah, our responsibility to our retirees already exists.
Yes. And you pay an expense every year, but you know, similar to your share of the retirement system, they go through a very similar process. They calculate what your current employees are and what you're paying out in retiree benefit costs, and send you an annual assessment letter. saying like, this is how much you have to pay this year in order to completely fund that liability by the time, 2032 or whatever it is that you're supposed to be fully funded. So, you have that liability out there. You're not paying those costs every year, but they're just trying to capture the fact that you have committed to paying these costs out, and you need to somehow recognize a number, and that's how they determine you need to recognize the number.
What if a municipality files bankruptcy?
Well, then you probably won't get stuck paying those costs. I don't know. I've never seen that happen.
Or if a municipality goes into receivership?
Yeah, I'm thinking you still need to pay those costs unless you completely dissolve itself. I mean, then at some point those liabilities would be the responsibility of somebody else, whether it's the state or whoever takes on those employees.
Right. So what brings me back to the point, what's the purpose of the OPEB?
It's just a government accounting standard that they required you to book that because they feel that it's a liability that's out there. Same thing happened, I believe, with the. Yeah, I know. I don't make the rules.
Yeah.
Unfortunately,
Okay. It's a government. I know what you're talking about. Okay. Thank you.
Yeah. Sorry. Yeah.
Well, as long as we've gotten this far, could you tell me what is an accrued compensated absence? I mean, that's just.
That's your accrued sick and vacation time. So if you had to pay everyone out all the accrued sick and vacation time based on the policies as of June 30th, that's the amount you would have to pay out.
Okay. Thank you.
You're welcome. Anyone have any other questions? Move on. Next, I wanted to take a look at the city's management letter, which would be another document, that you would have received. There are essentially 3 different types of comments that can be reported in a management letter. There are material weaknesses, which are what are considered deficiency in internal control that is so great that there's a reasonable possibility that a material misstatement could occur and might not be detected in a timely manner. There are 2 comments in the management letter that are reported as material weaknesses. Next, a slightly significant deficiency, which is a deficiency in internal control that's less severe than a material weakness, but we still feel that it is important enough to merit attention by those charged with oversight, which is you. There are 5 issues in the management letter that we consider to be significant deficiencies. And lastly, there are other recommendations and suggestions for either internal control improvements or procedural improvements that, will not a material issue, but we still feel are worth mentioning. So the rest of the items in the management letter are considered just other recommendations. And I wasn't going to go through and discuss every management letter. I picked a couple of them to kind of talk about, but if anyone has any questions on any specific ones that I didn't list here, please feel free to ask me questions on those as well. Now, the numbers on the screen here correlate with the number that they are in the management letter. So I figured I would just talk a little bit about it, and if you have questions, just feel free to ask along the way. The first issue is to improve the controls over general ledger postings, and we consider that a material weakness. In an ideal world of internal controls, the city auditor posts to the general ledger, and the treasurer is responsible for their records, and they keep what's known as a cash book that is essentially like a checkbook that they use to record their activity. And then at the end of the month, those records are kept separate and then they're reconciled together to make sure they're not missing anything and to really provide segregation of duties and a check and balance. During fiscal year 19 and, to some degree prior years as well, there's certain information that is posted to the general ledger that's based on the treasurer's cash book, which once you start posting off the cash book, there's no check and balance on that activity because you're booking it based on what the treasurer is telling you, which is really not the ideal situation. So there's a few instances where there's types of receipts that are posted to the general ledger that way. There's also some vendor payments that kind of bypass the warrant process itself and are posted, from the cash book to the general ledger that way. Your debt service payments and your health insurance payments. Tanya, I don't know if you want to talk to these at all, or if you want to just keep going and discussing them. There are responses. The city did provide responses to the management letter comments. So some of these, have been addressed along the way or are in the process of being addressed, but.
I really have nothing to add if you just want to keep going. And I'm sure if people have questions, I can always help answer them.
Okay. That's fine. I just wasn't sure.
Was that, if I can ask a question? Joe, Councilor McGivern, if I could ask.
Murphy.
Yeah, just so in relation to that, is that primarily because we had kind of a revolving door in terms of the auditor's office, and that the interaction between the treasurer's office and the auditor's office in many cases had gaps?
It definitely could be. I mean, it's definitely part of a process and procedure itself.
Uh-oh, we lost her.
Tanya, if you can hear us, you froze up.
A separate report doesn't go to the accounting office.
Tanya?
Yes.
Sorry, but you froze up for about 15 seconds when you were answering the question.
Oh, I'm sorry. No wonder everyone looked. Yeah. Okay. Let me know if that's still a problem. I can go connect to a different internet thing. I totally forgot to do that. It's super windy up here in the woods where I live, so hopefully it's not an issue. So I don't know where I left off, but it could be part of the procedural change. With the change in the treasurer, change in the city auditor over the years. Something might have been happening before, and then it stopped happening, and that was kind of the easiest way to address it, was just taking the number off the cash book, which really isn't the proper way to do it. So I was saying that, for instance, like sewer fund receipts, those get reported to the treasurer, but they should also get reported to the accountant separately. And then you should be able to reconcile those two numbers. Like most other departments do, they provide separate accounting to the treasurer and the auditor. But that's not happening in that instance. So I don't know if something just changed over the years and it didn't get fixed timely, but that's been happening for a few years now.
Okay,
yeah, sure. Does anyone have any other questions on comment number 1? Okay. Comment number 2 is to consider the long-term financial plan for the sewer fund. If you look at that comment, there's a table there that kind of shows the results of operations between 2013 and 2019. And as you can see, the sewer has sustained, operational losses for quite a few years, and even with kind of large influxes of money from the general fund to help subsidize those operations. So, we understand that the sewer rates were increased recently, but we just recommend that, this get reviewed on a periodic basis. Rates get looked at on a periodic basis to make sure that the rates are sufficient to cover the cost of that fund. Enterprise funds are meant to operate like a business, so they should be covering all of their costs. The rates should cover all the costs of that fund. So when it's not when it's not, the rates aren't sufficient enough to cover the actual expenses, it's not operating like a true enterprise fund.
Could I ask you a question on that as well?
Councilor Murphy?
Yeah, so, I mean, you're obviously looking at the receipts in terms of the sewer fund in relation to the projected expenses in the sewer fund, and that's how we ended up with a deficit. Do you ever take a look at if there were ways of reducing expenditures in the sewer fund rather than just raising revenues to meet the expenses?
We don't look at it from that perspective. We look to see, you know, what the city budgeted in terms of, you know, the costs and how you're funding those, whether your rates are going to cover them or connection fees or things along that nature. And if there's a gap there, then it obviously needs to come from the general fund. We don't look into, you know, whether or not the contract that the city has with a company, you know, could be or should be lowered or anything like that.
Okay, and do you also account for, because I know the next item is receivables, for sewer bills that have not been paid and what their impact would be in terms of that deficiency?
We do, yep.
And what percentage that might be?
Right. We do look at that. You know, your sewer fund, it operates on like a kind of a full accrual basis. So we accrue all the revenue related to those receivables. You know, a good portion of those are like commercial fees or commercial receivables as well, which, you know, come in right after year end, things along that nature. We usually book those as part of our audit and part of the DOR and free cash and retained earnings certification process.
But do we know what are, in terms of unpaid sewer funds for fiscal 19, how much of that would have been a percentage of the total account? Was it 5%, 2%, 10%? I mean, I know we made efforts to improve our collections.
Right.
And I just want to see how that would impact how far we need to go in terms of sewer fees.
Yeah, I don't have that number there. As of the June 30th cutoff, because we do an adjustment as part of the audit to kind of accrue receivables at year end. That would help. It's certainly not the only factor in this.
But it does have some impact.
It would have some impact, but on an annual basis, if you're continually behind, your revenue is continually behind your expenses, you're just kind of digging yourself a farther and farther hole there. But that would play a factor into the.
Okay,
into that
thank
too.
you.
Yeah.
Thank
you.
Tanya?
Yes.
Granny, once again, per our conversation this afternoon, Councilor Murphy asked some of the same questions I did, but I noticed that, you know, and once again, we get from 218, it was 1.9 million in deficiency, and then 219, it went down to 1.1, which is a significant drop, about $800,000, and then it's back up again to in 220. So would there be any indication of why we had a drop in 218 to 219 of $800,000 in collection fees?
I'm not sure what numbers you're looking at. I'm sorry. One of those years, I believe bills went out really late. Tanya, I don't know if you remember that there was a delay in the billing. So there was a large receivable balance that wasn't collected until the subsequent year. I'm not sure what year that was that factored into that, but that would certainly play a role in that.
I believe that was the year. Yeah. I believe that was the year. Yeah. Okay. Thank you.
Yep. No problem. No problem. I don't know if other people have questions.
Tanya?
Yeah. Yeah.
Tanya?
Yeah, Pete. Oh, go ahead, Linda.
Oh, thank you, Pete. My question was a general one around issues of material weakness. Back in the day when I was dealing with audits, it was sort of the golden rule that if you had a material weakness one year, you had to make sure that you didn't repeat it in the next year. And it looks like we've had a couple that have been cited year after year now, going back, I don't know, maybe up to 5 years. So in that type of a situation, if it just keeps persisting, what happens?
You know, we don't have a lot of control or say in that. You know, part of the problem, I think, over the past few years is you haven't had a permanent city auditor in that position. I mean, Bellamy was fabulous. He was great to work with. But he was supposed to be interim, and I think he was there, you know, maybe 4 years or so.
Yeah.
So there just wasn't really anyone that, you know, pushed to make changes or do things. I mean, we certainly worked with Bellamy and Sandy on, you know, the first comment there on general ledger stuff. We tried to work and figure out a way. Okay, so, you know, how do we post health insurance, or how do you get that on a warrant, or, you know, where's your problem here, and where's the other problem, you know, the auditor's problem and the treasurer's problem, and how do we work together to get that fixed? But I mean, it's really up to the city to address those issues, and they just, you know, haven't had the time or the capacity, I feel like, to do that.
Well, I'm glad we have our Tanya in place now to help stabilize things, which I think she's working diligently to attempt to do.
Yes.
So I feel optimistic that we might be able to finally get our arms around that. But from the city side, as the city council, we have some oversight abilities, but it seems on the day to day, it would really need to be coming out of the mayor's office as an operational aspect, with the auditor and the treasurer, right?
Yes, you know, ideally somebody in the finance department should kind of take lead on these things and really direct them. I mean, the mayor can certainly help with this kind of stuff, but, you know, some of them are very specific to individual departments or departments working together to do that. And there's really, you know, the city doesn't have a finance director or someone to kind of be cohesive to bring the different departments together. And certain departments are, you know, report to one person, other people, you know, so I feel like there's been a little bit of that over the years.
Okay. Thank you.
You're welcome.
Mr. Dahlman?
Yeah, thank you, Joe. Tanya, I think that's one of the questions I had with, as Councilor Bacon stated, that we've had a number of years where some things just haven't gotten fixed. And I think that's one thing that I think we've heard from your group, that there should be something like a finance director, somebody overseeing things, because apparently some of the things aren't getting corrected. Some things are trying to get corrected, but you got to have the departments work together. Getting back to the sewer fund, and I understand, along Councilor Murphy stated, like last year with COVID or the year before, some of the properties, you know, bigger accounts may have been put on lien. So, but I don't think it's a significant amount that's going to affect that much in that fund. But we did raise the rates a couple years ago in the sewer fund, and it seems like when we talked about that the DPW chief said it still looks like we should do a little bit more. I know that's difficult to put that on the users, but until we do that, I think we're going to have a problem just having that deficit year after year. It's either you gain more revenue or you cut the expenses. And I know we have a contract with them that's coming down to the wire in the next couple of years, but it seems like they're doing a decent job, you know, running the sewer department for the city. So that's something I think we have to look at, you know, with the fees, even though it's a difficult thing like taxes, but you got to have enough to cover it, or else it's going to be coming out of the general fund again, which is the general taxpayers. So
Exactly, right.
I appreciate your help with that. Thank you.
Just a reminder that good information, good ways to look at it, but we're still doing something that happened a year and 7 months ago, before COVID. This is fiscal 2019, the management letter, and I see Councilor Bartley have a question.
Yeah, yeah, no, just a comment. Tanya, thank you for being here. In Holyoke's form of government, the finance director is the mayor. I'm not sure why that's a mystery to anyone in this Zoom meeting. It is common practice, municipal government of the city of Holyoke. The finance director, the chief financial officer, is the mayor of the city. So for any counselor or any auditor to think otherwise in the form of government we have now is incorrect. Thank you.
Thank you.
Tanya, if you can go on with the management letter.
Yes. Anyone have any other questions on that comment? Okay. The next comment is number 3, which is improve controls over receivables. And as part of our audit process, we look to make sure that the receivable balances in the general ledger are supported by a detailed balance due report. So motor vehicle excise, a balance of $200,000, you know, there's a list of all the people that owe excise for that year. We check to see that for the various receivables as part of the city, as part of the audit. And during our testing, we found a couple instances where those balances didn't reconcile between the general ledger and the collector or the sewer department. You know, so that's an issue from our perspective. You know, there should be monthly reconciliations between the collector's office and the general ledger, or any other office that has receivable balances, such as the sewer department, or whoever's responsible for keeping the sewer department records. That's, you know, we've had that comment again for a couple of years now, you know, kind of related to the same types of receivables. I know Katie has spent a good amount of time trying to go back and resolve some of those over the past. I mean, there's obviously a cost benefit analysis that needs to be done there in terms of how much time should she be spending going back in time to try to figure out, you know, old issues and stuff along that nature. But
so are we letting receivables go well beyond what we should expect for a receiver? Are we not taking corrective action to collect, or are we talking in terms of actually recording the receivables, or both?
Yeah, it could be a little bit of both. You know, there are tax title takings that happen on an annual basis. So that process is happening. And, you know, eventually some of those are liened as well. So there is a process in place for that. It's somewhere along the lines where something got misposted either in the general ledger or on the collector side, and that was never discovered. So over time, that variance had just kind of existed or changed slightly over the years, and it's not getting, you know, reconciled, or no one ever went back to figure out what the difference was. So a couple different things there.
Okay, thank you.
So Tanya, when it says that the detail accounts were $470,000 lower than the general ledger and control accounts, does that mean that we collected more money than was due?
I don't know if that means that or not. It could be. It depends on which record is accurate, and at this point we don't know which one is the accurate one because they're not being reconciled. Katie, you know, when I talked to her about this during the audit, she mentioned, you know, so she keeps the detailed records, and then she keeps a control log. So, you know, for real estate 2019, you know, this is what we collected this month, total collections. This is what we committed, you know, kind of posting in total what her receipts are. But she is unable to reconcile those to the actual detail reports themselves, and she said she just hasn't had time to go back in to research that. So I don't know, but that's part of the reason the comment is in here and that we considered it a significant deficiency because it needs to, you know, be looked at.
Well,
And when you say Katie, are you saying Katie Drakowski
Yeah, she's a collector. Yeah.
as the collector?
Yes.
Okay, because Katie Drakowski is changing, working in a lot of capacities and about to change too, but thank you.
She is.
Dr.
And
Sullivan,
she's,
I'm sorry, I didn't mean to interrupt.
no,
she's fabulous, but
that's fine. I'm still trying to get an answer here. So there's $470,000 difference between the what's collected and the receivables. Are we collecting more money than we have outstanding receivables?
no, what I'm saying is your general ledger is showing a receivable balance of $1 million, and the detail report is showing a balance that's $470,000 lower than that. So the detailed listing of what's owed does not agree to what the general ledger balance is. And whether or not it's an issue with Munis, which has happened in the past in terms of trying to run those reports and something being off there, or it's something's misposted. You know, I don't know. And Katie's not sure at this point in time, or well, as of 6/30/19, I guess is the way we put it. I don't know what we haven't started the city's 2020 audit yet, so I'm not sure where that stands this year. You know, that number has kind of gone up and down over the years. It hasn't really stayed consistent in terms of the variances between the receivables from the collector and the general ledger.
Okay, and so you just said we haven't started the 2020 audit yet.
Right.
And we're already 8 months into past the end of that year.
Right.
When would that start?
We are starting that with this month.
Okay. So 9 months after the close of the year.
Mm-hmm.
And is that because of the slowness in response of getting things closed and to your office?
I think this year is a combination of a lot of different things. Everything is behind this year in terms of thanks to the pandemic. I mean, free cash got certified at the end of December, which means we didn't have final numbers until the end of December of this year. On top of that, there was issues with Munis in terms of running us the reports we need in order to download some information into our system itself. So it's a combination of things, and we've been straight out, unfortunately on our end, but as well. So.
So most municipalities, how quickly do they get that information to you? After the close of their fiscal year, end of their fiscal year.
It really depends on the municipality. You know, some get it to us in August, some September, some, you know, don't get things closed and reconciled until November. You know, it's kind of all over the road there in terms of what everyone's process is and how
So some are as early as August, and we're coming in the end of December.
Right. It was before that, because we worked on I don't remember the exact date that, you know, we started on the year-end close and review process in terms of preparing for the free cash certification, because there is some back and forth with Tanya and I in terms of you know, this doesn't look right. Why is there a big deficit in this fund? You know, does something need to get reclassed? It's kind of a back and forth process. You over a couple months waiting on information from the school and various departments to provide its information. So I know Tanya closed a little bit later than she wanted to this year. She was hoping to have it done earlier, but I don't remember the exact closing date when we first got information. But
I'm not faulting Tanya or our auditor at all. I mean, you're saying the schools and everything else, but
yeah,
my general point is some municipalities are getting you everything you need to begin the audit by the end of August. Okay, thank you.
Yeah, in terms of closing the books, I mean, there's often things that hold it up, like information from outside sources. This year, retirement system, actuarial reports, everything like that was behind. It's just the way fiscal year 2020 went, unfortunately. But yes, it can be done. Could be done earlier, and that is a goal. And I think, at some point we will get there once. I do. Tanya's done a great job over the past couple of years, and if she has any say in it, it'll definitely be done earlier. So.
Yep.
Councilor Bacon? Linda, you're still muted.
Oh, thank you. On the 470,000 where there is the discrepancy, for the purposes of the financials, do you take the lower number in such a situation?
We use the general ledger balance. So no, we do not.
Okay, so you took the higher receivable number at that in this instance.
In this instance, it would be the higher receivable number, because that's what's reported in the general ledger, which is ultimately what we're tying to and reconcile records to. And
okay,
yeah.
Okay, I was just hoping maybe we had a place where we could find some money.
No.
But apparently not.
I don't think so. I'm sorry.
Thank you.
Yeah, no problem. The next comment is number 4, which is improve internal controls over the budget process. As part of our audit, we review the city's budget in terms of, reconciling the city council votes to the tax recap, and then ultimately the budgeted amounts that are recorded by Tanya in the general ledger that are used as a tracking mechanism to make sure that departments don't overexpend budgets, things along that nature. And we found a couple issues in fiscal year 19. Mass General Law does not allow you to overexpend your budget. And there was 2 instances, and we kind of group things based on categories in the financial statements. So your health and human services category was overexpended, and your employee benefits category itself was overexpended to a tune of $280,000 in total during the year. We also found that the free cash that was voted was slightly over what was approved or certified. And of course, this is looking back essentially 2 years now in terms of the free cash certification process. So we just recommend that there's a process for monitoring that. And I know Tanya has and Bellamy kind of set up a spreadsheet after that point to track that. And we also found the revenue budget, the revenue budget that was reported in the sewer enterprise fund didn't agree to the amount per the tax recap. So, what you approve for your budget, that did not agree to what was in the general ledger and used to kind of track the budget compared to actual.
Tanya?
Yes.
Hello? Joe, may I speak?
Councilor Tallman?
Yeah, Tanya, so in other words, if some of those accounts are overspent, it's basically like, I have a checking account for $100 and I buy some for 150. How does that get caught? How can the council approve something? Usually where the treasurer's supposed to, or the auditor saying this is signed off, that there's enough money in this account. How does that happen?
My guess would be the part of it is that that check is not being done necessarily when a bill gets processed. There was also, I don't know if you recall, there's a bunch of issues a few years ago related to health insurance and things not being recorded properly in the general ledger. And part of that was due to, you know, the bills are paid by wire transfers from the treasurer as part of that office. And then at a later point, that information gets communicated back to the auditor's office, kind of after the money's, you know, gone out, which is what relates back to the first issue that we had. So that disconnect there, like the money's there at the door and you have to record a payment as it went out. So that, I'm guessing, is part of what caused, especially the employee benefits, health insurance category to get overspent, because there was really no good handle on that because of how it was being recorded or lack of being recorded in the general ledger timely. So
so it's sort of like timeliness. Something that's got to get done. One hand's got to know what the other hand's doing, like in a timely manner.
Right, because if you're back, you know, doing it later, then it's already too late at that
Already
point.
too late.
So,
Okay.
yeah.
Thank you. Thank you.
Councilor Lisi?
Thank you. One question that I would like to understand a little bit better is, as a council, we tend to underfund budget line items and then use free cash. It becomes sort of like a way to more tightly control how departments are spending their money. And I was wondering if this would in any way contribute to this habit of overspending within line items. I mean, do you have an opinion on that practice in general, or would that be tied in some way to the overdrawing accounts or line items?
Ideally, I wouldn't recommend doing that. I mean, you know, free cash really shouldn't be used to cover operating costs. In an ideal world, it should be used for, you know, setting money aside into your reserve funds or funding one-time items not to be relied upon on an annual basis. And I know, you know, years ago when the city had large amounts of free cash, you know, they would do a little bit of both. You know, some of it was to kind of to fund some additional like wants in the operating budget, and then some was used to set aside in, you know, for those other purposes. But over the years, I think it just kind of turned into a reliance on doing that, and that could certainly play a role into this. You know, I think as part of the budget process, just trying to cut expenses and maybe not having a good handle on, you know, what the actual costs were in like the health insurance and stuff like that. I'm not sure there was really good monitoring going on those line items as much as should be, you know, over the years when after the city lost Brian Smith. It was you know, so that probably doesn't help too. So
thanks for that. Thanks, Tanya.
Councilor Lisi, got your question answered? Because I'm going to answer it a little bit different. Tanya was very nice and diplomatic. We're a 12-month budget. When you cut the budget, the mayor, the auditor, the treasurer, the department head can only spend what's in the budget. So if they overspend, they're breaking Mass General Law, the simple Mass General Law of finances. The only areas we can deficit fund, and we can't do it this year, is snow removal and emergencies. So there's no such thing as city council cutting the budget and saying it's okay to spend if it's not there. They can't spend it if it's not there. Sorry.
No, I mean, yeah, you're right.
I could also, Councilor McGivern.
Councilor Murphy?
Yeah, I just agree with what you just said there. And to me, it's a case of every department head and everybody that deals with controlling an account within that department has an obligation, I would say at least on a monthly basis, to kind of review where they are, where they expected to be. And like you said, if there's a deficiency, we need to know that ahead of time and plan ahead to make sure that we're able to approve any financial transfers that are necessary. And again, it's oversight, but it's oversight by everybody in this case, in my opinion, because each department should be watching. This is what I had in my budget, and if after halfway through the year I'm at 55%, then I've got some problems here, and I got to start addressing those at that point, not when we come into June or May and June. Thank you.
Tanya? Or Councilor Lisi, do you want to hop in?
Yeah, I do. I do. I just want to say, you know, I think I really want to highlight that what this council has made a practice of doing is slashing the budget so that we're already starting the year off at like, you know, 60% in an individual line item for any given department. And then we're using that as a form of budgetary control so that people come in and say, oh, I need more. Oh, I need more. Oh, I need more. And we get to say, well, you could have it, but tell us why. And from what I'm gathering from this conversation here is that every time we underfund the budget, we're actually, you know, handicapping our own ability to comply with MGL because we're overspending immediately once we allocate any sort of free cash to fill in the gaps that we created from the beginning. So, I mean, I think that we really need to, you know, think about, you know, having an accurate budget. And when department heads come in for the, you know, budget hearings and say, I need this money, this is how much I've needed traditionally, and I have a logic and a justification for it, we're doing a disservice to ourselves when we underfund those line items, because then they have to come in for free cash. We're forcing department heads to come in for that free cash reimbursement, and it is considered overspending the account, overspending the line item. Thank you.
Councilor Murphy?
Yeah, just you know, I would disagree with Councilor Lisi on this basis. You know, the cuts that we made, at least in the last 2 years since I've been here, are related to what we expected to have in terms of revenues, and that we need to put together a balanced budget based on the revenues. And even then, we were unable to do that, and that's with almost $1 million in cuts, I think, this past year. So, I mean, it's a combination. I mean, in an ideal world, you're right. If somebody comes in and they prove that they can run an operation effectively, and it's not extraordinarily increased, if we could, we do it. But I mean, when we don't have the funds up front to be able to pay for that, we have no choice but to make cuts. And so, I mean, I don't think it's an attempt to micromanage. It's an attempt to have a balanced budget.
Councilor Bacon?
Thank you. And I would add, the problem that we were having is that we were spending money that we don't have. And the reason the city council made the cuts, as Councilor Murphy said, is because we had already tapped all the revenue and we were in a deficit. So we were attempting to decrease the deficit. So we cannot fund a budget for which we do not have the revenues. I mean, that's just fundamental basic accounting. And that's all the city council has been trying to do. And it's the purview of the mayor to be managing the budget and to be making sure the departments are living within the budget. So that is the purview of the mayor. Thank you.
Mr. Chair,
Councilor Graney?
the basic rule is you can't spend what you don't have. And when we cut the budget, what we're trying to do is balance it so that we're not spending what we don't have. Thank you.
Councilor Sullivan, you all set?
Yep, Councilor Murphy and Councilor Bacon summed up beautifully what I was going to say. The council does not underfund budgets. We do not slash budgets, right? We work within what we have for revenue. And that's obvious right now with what we're faced with for cash already this year. If we went with those budgets, we'd be even a bigger hole than we are right now.
But the one thing we don't do is reduce the budget. We reduce line items when it comes to us in the form of an appropriation. We have yet to reduce services. We have not reduced the number of policemen, the number of firefighters, the number of DPW workers. Our budget is all personnel, and we've never taken on reducing the budget by reducing government itself. And if we don't want to face that, we're just slashing line items in June to look at them in January to say, where are we? Everybody, Pat's and everybody looks at the services that are provided by each of these departments and don't want to see those services go away. But we don't do anything about it until the end of the year. So can we get back on 2019, Tanya?
Yes. Yes, we can. Okay. The next comment I was going to review was comment number 7, which is improve the timeliness of the cash reconciliation procedures in the treasurer's office. As I mentioned before, the treasurer is responsible for keeping what's called a cash book, which is essentially like a checkbook, and it basically has a different column for all the bank accounts that the treasurer has in her control. And at the end of the month, after information has been entered into the cash book, the treasurer is then responsible for reconciling all those bank statements to the cash books and accounting for outstanding checks, deposits, and transits, things along that nature. And we found, in fiscal year 2019, as well as in prior years, that was not being done on a timely basis. Maybe some of the smaller accounts or ones that just didn't have much activity were being done, but the treasurer's office wasn't keeping up with doing those reconciliations timely. And it really should be done, within a month after year end. All bank statements should be reconciled to the cash book, and that was not the case. Next, kind of ties into that a little bit as well. Comment number 10 is improve the timeliness of the trust fund cash transfers. As I'm sure most of you are aware, Massachusetts, or did you have a question, Councilor Bartley?
Councilor Bartley?
Yeah, you're on mute.
Dave, you're still muted.
Thank you, Chair. Thank you. I just want to look just to number 8, because it was 7 I was okay with, Tanya, but number 8.
Okay.
We recommend the city centralize the accounting for employee compensated absences.
Yeah.
Centralizing and fully automating this process would increase efficiency and provide the city with improved controls over the payment of compensated absences. So we just heard a comment about that from another counselor a minute ago, relative to what you were showing for fund balances. So does the city? I don't see it. I don't see a response here. So I'm just wondering what should I take away from this? Is this something that the city auditor should answer, or is this, or how do we get to this point of your recommendation?
The city is not required to respond to every single comment. So I'm not sure if they just didn't.
Oh, fair enough.
Yep.
Tanya, city auditor Tanya, can you enlighten me on this, please?
I can. Actually, right now, the city leaves it up to the department heads to track their employees' sick and vacation time accrued throughout the year. And therefore, we don't have any system in place, like for control. Like we could have a munis program, so that time was kept, accrued appropriately. That way what your liability is at the end of every year, how much outstanding sick time people have, how much outstanding vacation time that your employees have. And unfortunately, we don't have any type of system that supports that right now.
So any type, you mean when you say it's, do we need software or something, or is it just our mechanics inside the city government for a central repository? Is that something that we can work on, or should we work on it, Tanya?
Absolutely, we should work on it, and I believe that we definitely should have a timekeeping system, and that people should be responsible for timesheets other than just the department heads. Like I feel like I should be able to look up at any time and see what somebody's accrued vacation and sick time is. That way, if people go to retire or if they leave, we know what that liability is to the city. And unfortunately, we don't know that now until people leave and it's reported to HR. So you can't even budget for that appropriately.
Okay, are your sisters and brothers in other municipalities, do they have a system set up that we might be able to mimic?
They have systems and processes, but they also have timekeeping systems, and their accrued vacation and sick time is all it's in a program. They either use Munis or they use other timekeeping systems that are automated. Where right now we're doing ours by hand.
Right. You could set it up. You could set it up to work in conjunction with your payroll. So anytime somebody's paid, they earn, or any pay period, basically they earn whatever that is that they're scheduled to earn. And if they say they use sick time, then that gets reported as part of the payroll process. This is an area that we struggle with every year as part of the audit, to try to get this information from the departments, because there's these, as you can imagine, these huge spreadsheets that list everyone and their what they have in sick time, what they have in vacation time, their hourly rates, all this stuff to try to pull this together. It's very cumbersome, and it's really disjointed at this point in time.
So Tanya Campbell, so these are, you just heard a counselor say we need to rely on our department heads when it comes to the budget. When the department heads come in, they know what they want. How do you counselors, what are you doing making a budget cut, you counselors? But these same department heads account for something as basic as accrued time by hand, and it's not automated. So what you're saying, Tanya Campbell, is that this could be posted, Tanya Bedowitz, this could be posted through Munis and on everybody's pay advice. Is that something that I heard you say we could accomplish?
That's what I said.
So okay, so Tanya, our Tanya, I just have to. I can't believe it. Two Tanyas here. I think it's
sorry.
Yeah, Tanya.
I'll say TW or TC. It'd be easier for me to say that. So TW, is that, listen, I know you got 100 balls in the air, but is that something that could be worked on? What do you think?
Absolutely, we can get some costs from Munis or maybe some other other programs that are compatible with Munis on their timekeeping systems, and see what it might cost us to implement something like that.
Yeah. So Mr. Chairman, I appreciate your patience as always. And I just want to make one final comment. So Joe, when I looked at this management, that looked to me to be the lowest hanging fruit in the management letter. I mean, that looked to me to be the most gettable one that we could get. And so it's my hope that when we get maybe not FY20, because probably too late, but when we get to FY21, that we'll have department heads. We'll have department heads that are able to account for accrued time through an automated system. And so, Tanya, I look forward to working with you on that if there's anything we can do. Thank you, Mr. Chair.
Councilor Bartley, there's plenty of patience. Believe me, these are all good questions and all good discussion. I'll just remind everybody that Donna Dowdle was working on this when she left employment with the city.
Joe, how long ago was that? Why don't you enlighten us?
A good decade.
I was going to say, doesn't
9
really
years.
sound familiar. Okay.
Councilor Leahy.
Yeah, thank you. And thank you for this presentation, Tanya. TC, you're doing a wonderful job and providing a lot of good information. Kind of just to piggyback on Councilor Bartley. TC, do you know of any other community that does vacation time and PTO and sick time the way the city of Holyoke does it?
In terms of tracking it on Excel logs, it's pretty much what each department does. They track it in Excel. And yes, there are other communities that do it that way. Not as big as the city of Holyoke. It certainly would. feel like be a
Right, so
time and cost savings from
I
everyone's
guess
perspective.
well, I guess my thoughts, since I've been, in the workforce, since I've been like, working in offices and that sort of thing, I've always had my time accrued, my PTO or my paid time off on my pay stub. So I always knew exactly what I was getting, whether it was sick time, vacation time, compensatory time, what have you. I feel like that, I think TW suggested about looking at pricing. I'm thinking the city of Holyoke we could be losing money on this. I'm just kind of, I think this is something that we obviously we should do it. I think we need to do that ASAP. Thank you.
Councilor Bacon?
Thank you, Mr. Chairman. You stole my line, but I wanted to reinforce what you said because we already know that the Munis system can track this, and we were in the process of trying to implement it. But again, I go back to room one. If the mayor had wanted it to happen, then the time and investment would have made it happen. And I believe there would be a big savings and a higher degree of accountability throughout our entire city if we did that one pretty straightforward thing that is very common practice in almost every business and government sector at this point. Thank you.
Tanya?
All right. Okay. Sorry, where were we? Trust fund cash transfers. So as most of you are aware, Mass General Law requires majority of trust funds to be maintained in, separate bank accounts or tracked separately because they're required to maintain the interest that's earned on those funds. So for instance, your stabilization fund has to be set aside. The interest that's earned on those accounts stays with the stabilization fund. It doesn't go back to the general fund. So the city has various bank accounts that relate to the different trust funds. And, in your normal operations, when you pay a bill or money goes out the door, it comes out of your AP account, wherever you cut the checks out of. And then, periodically there should be a reconciliation between what's expended out of your trust funds and what's in the bank to make sure that they're the same. So whether or not you voted to put money into the stabilization fund, you need to make sure that that transfer is made in the general ledger and in the bank statements themselves, or vice versa. If money was spent out of a trust fund, you need to make sure that the money is coming out of the trust fund bank account to reimburse the city when it was paid out of your operating account. So that reconciliation wasn't really done for a number of years. So there's money sitting in trust funds accounts that really should be in general operating accounts, and the interest should be earned and retained in the general fund. So over the years, it's kind of gone back and forth some, but ultimately that the process of reconciling between the general ledger trust balances and the treasurer's trust balances should be done at least quarterly, and making sure that those transfers are done when need be. So, does anyone have any questions on that? Okay. The last comment that I wanted to discuss was improving the controls over the police outside detail funds. As part of the police outside detail process, when a detail is performed, the city pays the police officers for the time that they work. And then, bills are sent out to whatever company they're providing the services for. And, in some instances, those companies don't pay the bills, or they shut down, or things along that nature. So, you've already paid the officers for providing that detail, but the revenue is not coming in to cover those costs. So over time, these unpaid fees have resulted in a deficit in your police outside detail fund. And when you're paying the officers out and there's money not coming in, that needs to be funded at some point from somewhere. And that, you know, as part of a transfer from the general fund or something needs to make that fund whole, because there's nothing that's ever going to get it to be whole if money never gets transferred into that fund. It's going to continue being a deficit because there's no revenue coming in to pay those costs if those costs aren't paid. So,
Tanya, if I could ask you a question on that.
Yeah.
One of the concerns I have is if a police officer, you know, performs duties on an outside detail that is the revenue or the funding should come from, say, a contractor, you know, who's working on a city street or something of that nature,
Yep.
and the contractor, for whatever reason, does not timely or does not pay the money owed for that police officer. Now the taxpayer, you're saying the taxpayer's got to pick up the bill. Isn't this separate from city work?
Yes. And, you know, if that business is still in operation, then, you know, the city should try to pursue collecting that or put a process in place to not perform any more details for that company until the outstanding bills are paid. There's certain, you know, procedures like that can be put in place, but sometimes, you know, things just, you know, something happens and the business is not around anymore or stuff like that. And at that point, like that, those costs need to be covered somehow. And typically it's, you know, done by free cash or general fund or stabilization fund, like some source has to put money into that fund because it is a separate fund and it's supposed to balance itself out and kind of zero itself out at the end of the day. But if there's receivables that just aren't going to be collected, it's never going to balance out, basically.
Which I understand, but
Yep.
it also needs to stand on its own. And I think we've taken some steps to get to that.
Yes. No, I agree. It's supposed to operate that way. It's just, you know, ultimately there are just going to be those instances where there's, you know, receivables that can't be collected. So.
Okay. We do have Sergeant Hart with us representing the police department. John, did you want to comment on this?
Yes, I just wanted to say, Tanya and I have been working on this along with the city solicitor, and we do have that fee that's been in place for a little over a year, and I think Tanya can probably talk more financially about it, but I think that's going to resolve that issue, and in the future have that fund in the positive. So maybe Tanya can talk a little more on that.
So I can say that the police have started charging a fee on the off-duty services they provide, and I can't remember what we've collected this year, John. I know you and I had a conversation about it the other day, but what we need to do is just change the ordinance to say that those fees can be deposited into that off-duty versus going into the general fund. I believe I also reached out to Tanya Campbell regarding that as well, just to make sure that that was something that we could do.
The admin fees, right? Is that what you're talking about?
Correct.
Yeah. I mean, those typically go into the general fund to cover just the costs of, you know, sending out the bills and those kind of things. That's what that fee is meant to do.
Mm-hmm.
But unless you guys, you know, change the ordinance to.
Yeah, I for one have no problem as long as you pay back the general fund for all the money that we've covered these outside details in the past. But that's a horse of a different color.
Yeah.
Councilor Bacon.
Thank you. Relative to those, I mean, I think it's fine to charge an administrative fee, but that doesn't set aside the need to make sure that we're doing our billing and our collection on the jobs and then not doing jobs for companies that aren't paying us. Because the admin fees aren't going to be able to cover all the unpaid bills that we have had over the years. I mean, I'm going to be very interested to see how that account is doing, but we really need to get a lot tighter than, I believe, just adding an administrative fee. We just need to make sure that we're getting paid within 30, 60, or 90 days or not continuing to provide the details for these companies. Thank you.
Counselor Sullivan?
Yeah, thank you. This could be to start, I'm sorry, Lieutenant Hart. Are we still not making the contractors pay ahead of time before they get their permit, a deposit on the number of hours that they'll be required to have the police service? Because that's what the water department does, and that's what we suggested over a year ago also. I mean, the administrative fee is fine. As Tanya Campbell suggested, that should really be going to cover the administrative costs, not the deficits or the inability to collect from some of these contractors.
What we've done with Katie McCoy and with Laurie Belanger from purchasing, we've identified those vendors who are 30, 60, 90 behind, and have Laurie's implementing some policies and stuff to avoid them to go on to future bids until they come up current. But no, we haven't implemented any type of policy to have a prepayment prior to work or down payment. That would probably have to come from purchasing, I believe.
Or for that matter, another simple procedure, and either Tanya could correct me if I'm wrong here, would be to not make final payment to the contractor if that amount is due, to subtract it from the balance that is due to that contractor. Why are we paying them and then trying to get money back after the fact? Either Tanya.
Yeah.
What is it? Go ahead. You can go if you'd like.
Oh, I don't know how that would work. I mean, it's not necessarily them doing a project for the city every single time. And I'm not sure you could really.
It's separate, actually.
Yeah.
It's definitely what they're doing is separate from your city activities. So I don't know how you would do that either.
Yeah, it's like the state coming in to do road work, and they need to use a police officer for the project. So the city's not paying the state to do the project. The state is just paying to like rent the officer for a couple of days or whatever. So so there's no money exchanging hands there, other than, you know, they're getting an invoice after that they have to pay.
Well,
if I can just add one thing to Councilor Bacon's comment. These past due amounts are from years ago, mainly from Kahunaville. That's how long ago these funds have been in arrears.
Kahunaville, that's a blast! Wow.
Yeah, exactly. So that's where the majority of these funds came from. However, like I said, we have really fixed a lot of the issues, and the fee is, like I said, is going to pay off this deficit, and it is going to be in the black probably within a year, if not definitely 2 years, it'll be in the black. And then at that point, it will continue to grow with these fees. And at some point, it's going to be up to the city councilor to decide what to do with the excess amount of those funds.
Councilor Tallman, then Councilor Bartley.
Yeah, thank you. Just real briefly, I along the lines of Councilor Sullivan, I think we talked about this earlier, and I know Sergeant Hart or Lieutenant Hart, we brought this up about it's too bad the company couldn't pay directly out of their fund when the work is done, instead of it coming from the city and the city waiting to get 30, 60, 90 days. Because I think in the report, it also stated that some of these were so far back that we'll never be able to recoup the funds. It could have been $150,000, $200,000 that the city had paid out that the company may be out of business or closed down or whatever. So I want to see if whether it's a company or the gas and electric or the state, that they would pay, within a week, the salary of the officer that's doing the work, the road job, and then the city wouldn't have to pay and have to wait for the money possibly coming in. And I know the funds, the admin fee will help in the long run, but I don't see it taking care of the deficit that we're in for another 2 or 3 years. So I don't know if anything can be done about that, but I would love to see it come right from the person that hires the police officer to try to pay them, within the week to get the officer paid.
Yeah, so as far as the funds go, I think when I sent that email back in October, I believe, or November, I forget, or maybe it was December, but and at that point, I think I had mentioned that we had already received over $150,000 worth of fees. However, that all went into the general fund. So that deficit could have already been almost paid off, and that was like a year and a half worth.
So that money's already into the general fund, so it's not really seen there. It should be in a special fund that Tanya basically stated that the ordinance would need to be created for.
Right, there was nothing in place to put those funds into the off-duty account, so they were just rolled into the general fund. But now, I guess, once we create a new ordinance to have those funds go directly into the off-duty to pay down that deficit, we'll see that.
If that's the case, that money coming in, then the receivable should have been written off to bad debt a long time ago.
Councilor Bartley?
Tanya? Does that
So,
get written off? Yeah.
Yeah, you do need to go through a process of writing that off. Ultimately, writing off the receivable has no impact per se on the fund there, because it's your receivables are all deferred, so it's not, that was never recorded as revenue in the fund anyway. So when you write it off, it's going to have a net impact of 0 on your on the deficit that's in that fund. You're just basically saying you're never gonna, you have a receivable of $300,000, but $200,000 is uncollectible, so you really should have a receivable of $100,000, and that would be more accurate. And I think someone needs to go through the account there and mark those for write-off. Did you guys mention something about switching softwares to track the police outside detail receivables? Is that underway, Tanya? Or
yeah, that was also that's part of our DTS system to pay for the software to track the overtime hours.
Okay.
And fees. Yeah.
And fees. Okay.
Councilor Bartley?
Yep, thank you. So the way I look at this is I'm looking at page 11. So it said we recommend the city implement a process to ensure collection. Okay, so it looks like what Sergeant Hart's saying is that they're with the fee that they implemented, and I'm not 100% sure how that did. I don't remember us, and maybe the chair can tell us. Did we set up did we pass something in? Well, I know this is outside, but maybe that's the explanation. But I don't remember city council setting up a fee. But maybe the finance chair. But when I get done, Joe, maybe you can just explain that to me how that's set up. How a fee was imposed by HPD outside of a city council. So if you can just answer that question for me when I'm done with this will be quick. Then the second point, TW, Tanya, the process should include precluding officers from scheduling outside detail, et cetera, with companies, individuals, organizations who are in arrears. Where are we with that?
So the auditor's office does not handle any of the police outside detail. That's all handled internally in the police department.
Sergeant Hart, where are we with that?
Like I said, we're working with purchasing with Laurie, and we're doing monthly updates and putting out collection notices to all the vendors. And like I said, if they're in arrears and haven't paid, Laurie will flag those vendors and prevent them from, obtaining more bids and working in the city.
Okay, so is that something to, is that going to be a policy, Sergeant? Is that something we should get in writing from Lori Belanger, or can we get a list and understanding or publicize who these vendors are?
Yes, we've been forwarding all the information. Katie has each vendor broken down by amounts they owe, 30 days, 60 days, 90 days past due, and I can get a copy of that and forward it to the city council if they'd like.
Well, I'd like it, and is that something? I mean, the more you publicize it, the better. That's the way I look at it. This is for Tanya W, because I think this does go back to. We also recommend the receivable be recorded in the general ledger and reconciled to detailed balance due reports on a quarterly basis. So is that happening, Tanya W?
That is not happening, but that could easily happen with a report from the police department. We do it with other departments for their receivables. So it would just be an entry that we would do into the general ledger, into that account that would show the receivables that they would be expecting in for those services.
Okay, is that something that Sergeant Hart, you can coordinate that with Tanya W?
Yes, I'll forward that to Kate McCoy, who handles all the outside detail stuff, and they can.
Even better. So Tanya W. So Kate, you can coordinate that with Kate McCoy.
Yes, I can, as long as she has the reporting abilities and she will, she has the time. I'm not sure that that's her responsibility of the off duty.
Yeah.
But yes, absolutely.
Right.
She could if she had the reporting ability and the time to do it.
It should just be a matter of printing a report at the end of the month for what got billed out, because your collection should come in from your receipt side of things. So you need to record what got billed out, which can be done just on a monthly basis. Just once a month you make an entry to book that.
Just like the sewer.
Exactly. Yep.
Thank you, Mr. Chair.
Okay. Tanya, I think that concludes the management letter.
It does.
And I'll just ask you one question and we can move on to item number 2, I believe.
Okay.
The difference between material weakness and significant deficiency. For this report card of ours, which we don't want to see either of those, but which one, could you explain a little bit detail which one is the more problematic for the city?
A material weakness is more significant of an issue than a significant deficiency. Material weakness is what we would consider like a major breakdown in internal controls or some control that's not in place. That basically means that something could occur that is material and it might not get picked up because that control is not in place. Significant deficiency is, from our perspective, still a very important issue, but not as severe as material weakness. So neither of them are good, but material weaknesses are worse.
Thank you. And is it safe to say at this point, fiscal year 2019 is closed?
Yes. Yes, it is.
Is there any further discussion on item number 1? The chair will entertain a motion. This is a received
Item number 1 is
report.
complied
Number
with.
2? Second.
On item number 1, the motion, I guess, would be that we've the receiving of the outside audit report has been complied with, and I think we should report back to the full city council, although we do have, I think, 9 or 10 members with us this evening, but report back that we've done our due diligence.
I'll second that.
Is there any further discussion on the motion? All those in favor?
Aye.
Any opposed? So moved. Thank you. Item number 2 is slightly different, but I think it comes right off of the the audit itself, even though the audit itself is from 2019. Item number 2 is that the Finance Committee invite Tanya Campbell of Melanson and Heath to discuss the fiscal 2020 certification free cash process. That's item 2A, and 2B is the listing of deficiencies. There was a worksheet that we were provided with, and I think there's also a final, deficiency sheet that is attached to or part of the recap sheet itself, if I'm correct. We also want to make it clear that to Tanya, not clear to Tanya, but Tanya, I'd like to make it clear to everybody else that when we voted on the final recap for the purposes of setting the final tax rate, we were working with a free cash certification that was around 0. That was not the final free cash certification. And I know I've seen one number in the negative 300,000 range, and tonight I'm seeing a negative 400,000. So I think we have a final certification. If we could just, Tanya, or Tanya, both of you, if you could just help us out what that actual final certification was. But more important, Tanya, we're looking for a more current update. I realize the audit for 2020 has not started, but free cash certification has finalized, and just how you got there and where we are.
Sure. It's a lot of things to tackle. So I try to, when I talked to Councilor McGivern about this discussion, I wanted to kind of capture a bunch of different information and present it to you. I'm sure all of you have the free cash calculation form, the DOR prepares, and it lists a couple of key numbers on that, including your unreserved undesignated fund balance number, and all the deficits that they list out. And I've tried to summarize these for the past 5 years so you could see kind of how things progressed, and what things look like each year, because there's a lot that, like, while free cash is a number, there's a lot that goes into it and a lot of factors that affect it. So I tried to summarize that information on this page here. So for fiscal year 20, your certified free cash was negative 346,000. It's the third number down on the far left there. When I had done, my calculations at year end, I had factored in deficits from your grant funds and your capital project funds, and also your receivable variances. They hit you for those on your free cash as well. What I had not factored in and I hadn't worked into my spreadsheet.
Froze up again. It's that windy weather up there. Tanya, can you hear us?
When you take my original estimate and back those out. Yes.
Tanya, not bad, but you froze up for only the second time.
Oh, I see.
Right, it was right when you said you factored into your spreadsheet.
Right. So I hadn't factored in a couple other balances that they looked at as part of your balance sheet, and reduced your free cash for. So there was a withholding deficit of 85,000, a refund due balance of about 50,000, and another receivable of 188,000. So they hit for all three of those items, which gets you down to the negative 46 certified free cash number. So, when looking at free cash, as I was saying before, your undesignated fund balance, that's essentially like the starting point for DOR's free cash calculation. And you can kind of see over the years that, that number has been trending down. And there's a couple of reasons for that. Part of it is when the city did have certified free cash, you can kind of see with my little arrows there, get certified one year and then you vote to spend it the subsequent year. And for 3 years in a row, the city was spending down all of the free cash that was certified as part of the budget process. And when you do that, you don't leave any in there to kind of create a buffer for future years. So that's one of the reasons your undesignated balance didn't increase in any of those years because you weren't leaving kind of a buffer in there for the next year's calculation. Other things that factor into it, when you're looking at your budget, as part of that process, you know, if you budget revenue at $500,000 and it comes in at $1 million, you have a surplus in your revenue that's budgeted, and that falls through, you know, in this grand scheme of things, it falls through to free cash. Same with when you budget expenses, and if the departments turn back some of those funds, those fall through to free cash. So if you look at, I have a section called General Fund Budget versus Actual, you can see how, you know, over the years, the turnbacks of appropriations have been small, and in some cases, they were negative numbers. So, you know, you're spending more than the appropriation itself, which is not allowing you to kind of replenish that free cash balance or your undesignated fund balance number. You know, certainly there have been deficits and overdrawn accounts, as you can see, that kind of hit the city's free cash every year. You know, in recent years, DOR's kind of had you raise some of those. If they stay consistent over the years, they are requiring you to fund those and raise those on the recap. So hopefully those won't go, those won't continue, and you keep getting hit on your free cash certification process. But there seems to be, you know, every year more that just keep coming up. So I don't know if anyone has any specific questions on.
Tanya, can you provide this this particular slide for us?
Yeah, absolutely.
I see a couple of us are taking pictures, but I don't know if that's going to work.
Yes, no, I can send the Excel spreadsheet if you want. You don't even need the PowerPoint. I'll send the
Thank you.
Excel.
I think most of us have lived the free cash over the years, but I think we've learned something the past 2 years, more because the lack of free cash, but that these deficiencies have actually been there for a period of time, and a pattern that started, you know, I'm sure several years ago. You said it very well. You know, Bellevue Smith did a job. He was appointed by the mayor, our chief financial officer, to fill in for the vacancy when Brian's, well, it was actually not, it was after Brian. Well, he was appointed twice, when Brian first left, and then we had an auditor who didn't last too long. And then when he left, Bellamy came back, and we appreciate what he did. But ownership of a very large budget with a lot of complex, you know, angles to it, I think is something where things got out, you know, things got put to the wayside. I just wanted to talk about, because you've I think hinted towards it, but our current auditor, you know, the sheriff, who's been in town for almost 2 years now, is starting to take ownership, and she implemented some policies this year, and the ordinance committee has worked with her very diligently to make that policy into an ordinance, you know, to make sure that we are following this. Are we going in the right direction is basically my question.
In terms of addressing the deficits and overdrawn accounts, I believe so. I mean, I know I've had various emails with Tanya. I'm trying to address those, and she's really working with the various departments who typically have overdrawn accounts at the end of the year. The grant funds that are in deficit, and you know, there's a couple a 3-month window that DOR allows you. If the receipt comes in within 3 months of year end, you can accrue it back so you don't get hit as part of the free cash process. You know, for instance, you know, Chapter 90, there's really no reason that fund should ever be in deficit and you should be hit for it on free cash. There should be a process in place where those funds are requested timely enough, especially around year end, so that's not a deficit as part of your free cash calculation. There's certain ones. There's other ones that, you know, I think just the departments that are in charge of them just need to have better oversight over those and be more aware of where the funds are, you know, getting closer to year end, just starting that process maybe a little bit earlier. So they're reviewing them in May and early June to make sure that everything's reviewed timely, or if any issues come up and they know it's going to be in deficit year end, maybe you can do something about it before the end of the fiscal year. So we're not in the same process or in the same position every year.
Sounds like that policy has been, set in place and the wheels are turning. Some of our grant managers are telling us, and you just said it, 3 months after, you can still reconcile the end of the year, deficiencies.
Yep.
And some of our grant managers are telling us that these reconciliations have been done, but they weren't posted. Now, I'm not talking about the last 2 years, but going back in time, weren't posted properly by the city.
Mm-hmm.
How do we correct that, to wipe this off the books so we can get a clean start and go forward?
Yeah, I know we made a couple adjustments at the end of 2020 in terms of, sometimes receipts for grant year 2018 get posted to 2017, for instance. So that fund has a surplus, but your, Fund 18 has a deficit, and it really shouldn't at year end because stuff receipts actually came in. So then it's just a matter of, looking at the list of accounts and saying, like, does this make sense? Should this fund really be in deficit? If not, then where did those receipts get posted, and make an adjustment in a timely fashion to correct that. If it goes way back, then, you're not gonna like my response, but, there has to be a transfer in, similar to your police outside detail. There needs to be a funding source to cover that deficit, which is part of what DOR does on an annual basis. If the deficit stayed the same, there's no more activity in that fund, they've required you to raise those, because if you don't raise them, they're just going to stay there forever and they're never going to get addressed. So, so DOR is pushing that a little bit, but if the city can do research and determine that it got misposted into another grant fund and just kind of make an adjustment, then there's no effect from the general fund perspective. It's going between two grant accounts, which
I'll ask one final question. There's a number of hands that are up, and I'll leave it at that for now. But when our schools are in receivership and have been for several years, we have no local control over that. And yet, they're not a lot, but there are some deficiencies within the school department budget, which is part of our budget. How does the city reconcile something they have no control over?
If I knew, I might be very rich. I don't know. I mean, just trying to work with them, the best you can. $3,000 deficit is not going to be the end of the world. If you have a couple $100,000 deficit, should be monitoring that and trying to work with the school department, before year end to figure out what's going on with that account.
Well, we do have the right person to work with. His
Yes.
name is Anthony Soto, and
Yeah.
Tanya is working with him.
Yep.
But it's frustrating, that they're in receivership and one state department is telling us, here's your problem, and yet we have no say over it, no formal say over it. I'll say that the prior receiver was good with us, and Mr. Soto is fantastic. So hopefully we can get to that page, but it is frustrating. I'm taking up too much time. Councilor Bartley and Councilor Tallman.
Yeah, thank you, Mr. Chairman. Tanya C., would you just for those of us that may be new or may not understand what free cash, would you just tell us what free cash is, maybe what it isn't, and whether or not, in your opinion, it has any significance?
Sure. So at the end of the year, the free cash is, your surplus that's available to be spent as voted by the city council. DOR has a process for calculating that number. It's the same across all cities and towns. The standard form that they use, and it's essentially your surplus, I guess, in your general fund. There's a balance between generating too much, which essentially means you may be overtaxing people, and not generating enough, which would be can result from a couple different issues, like I have kind of outlined here. Ideally it should be spent on things such as one-time purchases, like capital items, or putting money into your reserve, your stabilization funds. I mean, that's what DOR recommends you use your free cash for. They don't recommend you use it as part of your annual operating budget process and things you're going to be paying for on a every year basis. You run into issues like this where you rely on the free cash, and then if you don't have it, you don't have money for your operating costs.
Is free cash, does it have significance in your opinion?
It does, speak to some degree to the health of the entity. We look at that number in every audit that we do, and just see what it looks like. I mean, we don't usually write up a management letter if it's a negative number, but there's certainly, comments in our management letter that factor into this, like the issues we noted with the budget process, the sewer enterprise fund, the deficits in that fund, which ultimately have to be funded by your general fund. Like there's factors that play into it. So, while it's not the most important number, it is, somewhat significant, I think.
Yeah, I appreciate that. And I'm just harkening back to what another counselor said 2 years ago about free cash. So I just want to get it from you, the independent auditor. And I'm just going to finish this way, Mr. Chair. I just think it's important that what Tanya C said earlier, the downward trend in free cash. How did that happen? City spent all its free cash, left no buffer for future years, Mr. Chairman. Mm-hmm. That has got to be emphasized to counselors and mayoral candidates. I hope they're paying attention. Second of all, what I heard Tanya C., the independent auditor, say, and I hope she will correct me if I misinterpreted it, revenue, do our best to underestimate it. Expenses, do our best to overestimate it. How many times have we heard the finance chair talk about the prior auditor, Mr. Smith, who did just that? I don't care about assigning blame, because it doesn't matter at this point. We're in the situation we're in now, but I hope counselors don't forget how we got here, and let's do our best to conservatively, and this has got nothing to do with politics, it just conservatively estimate where we are so that we can prudently move forward, and we're not caught shorthanded like we were 2 fiscal years ago, Joe, with 60-something fund balances that were out of whack. I mean, this is what is pounded free cash. It's just again, I don't want to assign blame, so forget that. Let's just be conservative. Let's just take the Brian Smith mode. Let's be conservative with revenue. Maybe there'll be more revenue and we can throw in the free cash. Let's be pessimistic about expenditures. Let's say they're going to be more than what they are. Maybe they'll be less and we can throw them into free cash. And then when we get to free cash, I think we heard what the independent auditor said, because I truly believe that we're going to move forward after this calendar year. I believe the city's going to move forward in a positive way. And so if we can just be prudent about that, Mr. Chairman, I think we'll learn, I know I have, I think we'll all learned a good lesson. Thank you.
Thank you, Councilor Bartley. Well said. Councilor Tallman and Councilor Sullivan.
Yeah, I'll be brief. Thank you, Mr. Chairman. I'm glad, Tanya, you brought that forward about the free cash, how there was no cushion. You know, the 2016, we had 2 million, 2.3 million. We spent it the next year, in the following 2 years. Can you just explain to me the, on the last, all the way on the left, down to the general fund budget versus actual? Could you just explain those three numbers there for me and what they actually mean?
Sure. So the state and local revenue in excess of budget, what I was saying earlier, like if you budget motor vehicle excise at 400,000 and you get in $1 million, you've generated, you know, essentially $600,000 in excess revenue that's going to flow through to your bottom line and ultimately flow through to free cash. The next line, the appropriation or turnbacks, would be if you budget $5 million of expenses and you only spend $4 million, then you're turning back $1 million of unspent funds that you budgeted for, you raised taxes for, but it was never spent, so that flows through to your bottom line. The deficits there on the same line, there was a couple of years where the city overexpended the budget in total, the budget line items. We talked a little bit about that earlier.
Right.
You know, if you're overspending that, you're actually using up more because you spent more money than you actually budgeted and raised revenue to cover. So, so that would hurt your free cash.
So far this year, does that make that we're in good shape in a way with the 1.6 million?
It does. I mean,
compared to the previous year.
That's certainly a good number compared to previous years. From your appropriation or your turnbacks line, you know, your state and local revenue was really tight. But so that regeneration of free cash already flowed through to that undesignated fund balance number there, which is why this year your undesignated balance is higher. You know, one of the reasons it's higher than last year is because you did turn back some money this year, but you still ended up with negative free cash because of the various other factors. It just wasn't enough to overcompensate for the other issues.
Okay.
Yeah.
So basically, is that with that number, the 346,000 deficit? What does that mean for the city? And is that something that has to be made up somewhere?
It's not. That number itself does not need to get raised. I haven't looked at your FY21 tax recap yet. We'll look at that as part of the audit process. But there may be some accounts, and Tanya, you might know this, if DOR made you raise any of those deficits as part of the $2 million on your FY21 recap.
They did not.
Oh, that was nice. Okay.
Yeah.
Okay. That would be the only thing that might factor in. You know, if you end up with a negative free cash, it just means you have no free cash to spend on your budget. You know, DOR has the power to require you to raise deficits if they feel that the true deficits and they're just never going to go away if you don't fund them that way. But that's all the purview.
Okay, just one more question. I'm not done yet. I'm not done. One more.
Hang on one second.
Yeah, I just have one more question, Joe.
Yeah.
Okay, Tanya, on the fiscal 2020, then compared to 2019 with the deficits, the overdrawn accounts, you know, at 2 million, with what we're doing with the grant funds and what we're trying to do, keeping an eye on things better, will that more than likely go down next year?
In an ideal world, yes, it should. If those deficits get addressed and corrected, you know, before June 30th or as part of the year-end close process, that number could go down. You know, some of the balances that they're hitting you for are for other things such as variance in your receivables. So if your tax title account, for instance, it's maintained by the treasurers, doesn't reconcile to the general ledger, it doesn't matter which way the variance goes, they're going to hit you for that variance. So over the years, we've we've worked with the city on getting the cash variances down, but there's still some receivable variances that are there that continually hit. But even if those were the only, if you got rid of all the other deficits, that would be a much smaller number, even if you're still getting hit for some of those receivable variances.
So some of those variances, like you said, if we can get those down, and part of that is to try to research, it could be something from 5-6 years ago to find out where that difference is. That could be a big help.
It could be, yep.
Okay, thank you.
Another thing I'd actually like to add to that is one of the things they did make us write off is $1 million in our sewer deficit from the previous year. So that's a big chunk right there that, you know, as we work towards, you know, is evening out that enterprise fund, I think that's going to help us as well.
All set, Peter?
All set, Joe.
Okay. I have Councilor Sullivan's hand up. Councilor Leahy, did you have a follow-up question?
No, I had a point of information. I didn't have a question.
What's the point of information?
Well, I guess I really don't want to say now, but I was going to say that, you know, in the future, any president, if it's Councilor McGee or if it's President McGee, the people on Ryan's board, the subcommittee, should make up of people that kind of understand the business aspect of this. This is extremely important. And I just wanted to say it once again, thank you so much to both Tanyas for coming in and explaining all this to us. And I know the people at home are getting a great education. So thank you very much.
Councilor Sullivan?
Yeah, thank you. So Tanya, when I look at that, the 2,009,000 there in deficits, three of the line items alone account for $560,000. One's a SAFER grant from 2017. So that one, for example, was that also included in the deficit amount for 1918 as well? 2019 and 2018?
Yep, the prior year it was 224,000. The year before that, I don't see it on there. It was 44,000. So, yeah, so it's been on there for a few years. The deficit has, you know, did jump a good amount 2 years ago, and kind of stayed close to the same for this year.
Well, I mean, but it says here, SAFER 2017.
Yeah, that's the name of the fund. Now, some of those grants can last for over a couple of years. My guess is there, you know, a receipt that got misposted somewhere that needs to be researched and figure out where that's offset. But
SAFER grant is 3 years.
Fire
yeah, yeah.
All right. So I take it at this point, there's no hope in recovering that money then, right?
Unless there's another SAFER grant fund in the general ledger that, you know, where the receipts actually got posted. But there, you know, that's just one of the accounts that, you know, needs to get researched. And, you know, Tanya and I talked about it a little bit, you know, there's no point in her spending a great deal of time researching a $113 deficit. You know,
no,
so there's,
I agree with that. This is a $267,000 deficit.
Right. No, sorry. I was just saying, like, so like from a cost benefit, like start with the big ones and figure out, you know, what's the issue with this? What happened? Did the receipt get misposted? You know, work with the department. What do they have in their records from their books? You know, did they request everything? Which, you know, I would assume so. We worked with the fire department before on reviewing these kinds of grants, but you know, so start with the big ones, and then once you get down to the smaller ones, then you got to figure out, like, is it worth her time to look at $113, or do you just, you know, at that point vote a transfer to kind of clear a list of amount that all total $20,000, but you know, that are just never going to go away. So,
I totally agree with that. There's no reason we should be looking at a Zaire Plaza settlement.
right.
Right?
Right.
I mean,
yeah.
Joe, what's that, 30 years ago? I don't know.
35.
Oh, so yeah, it's just
For $484. I don't want to
Exactly.
miss a nickel on that. But
Right.
we've got just 3 alone that total $560,000. And they're dating back already 4 years now. 5
Right. I mean,
maybe on the Safe Youth. And this is the first time I see the Governor's Summer Youth Program.
that's a school grant, I believe. You know, Chapter 90, as I was saying before, you know, there should be a process in place to request those funds on a timely basis. So, you know, that $275,000 deficit, you know, there really should, ideally, should never be a Chapter 90 deficit on this calculation.
This is not, I'm not talking about Chapter 90. This is a whole separate line item, right? For $158,947 in addition to that
Yes.
275.
Right. So the school department's ultimately responsible for that grant. You know, they need to provide information on, you know, when those receipts came in, or if they haven't requested that funds, then they need to do that. You know, and that process should start fairly soon in terms of looking at these to make sure that there aren't mispostings or things occurring, you know, well in advance of June 30th. So if something needs to get corrected, it can be done. You know, you don't want to be looking at these in July. You want to be looking at them before year end and trying to address as many as you can.
All right, so let me just focus right now on this Safer 2017 one for $267,000. At some point, as I see it right now, we're just going to have to write that off. Am I being too pessimistic here, or?
Counselor, I'd actually like to speak to that. So that Safer, and I know that I've had conversations with Tanya as well. There was actually 2 Safer grants at the same time, and I have researched. I believe I found about $150,000 worth of receipts that were posted to the wrong fund. So I have sent them all over, and now I'm just working to make sure that that is an entry that we can do that's allowable without, I don't have all the proper documentation, but I can show that it was a whole different grant. Same with, there's a couple other ones on here that I've done a lot of work on, actually. That Governor's Summer Program, I know what happened with that. There's also receipts in another school. See, you're not seeing the surpluses on here, but you're seeing the deficits. There's another fund that actually belongs to the school. This one belongs to the treasurer's office. The receipts were being posted to the wrong fund. So you're not seeing the surpluses that are in these other accounts, but what you're seeing is the deficits. So some of them, the larger ones, I have worked on. And hopefully they'll be reconciled this year. Probably not all the way, but it will bring it down some.
Thank you.
Tanya, not pointing a finger, but when you say posted to the wrong accounts, where is that wrong posting occurring?
I don't know if it's coming from the department. I don't know if it's coming from the treasurer's office. It's really hard to say. I don't know who's, I'm assuming it's coming from the departments.
Departments
it was a while ago.
Departments are saying the other one.
Well, the treasurer's typically responsible for coding receipts. But the department should be reviewing the grant accounts that they're responsible for and monitoring that. So they should know if a receipt came in, and if it's not showing in that account, then they should be asking the question as to why that fund's in deficit. So
that's why we talk so much about reconciling and how they should be reconciling on a monthly basis, and they need to be looking for those receipts and making sure their expenses are matching their receipts.
Right.
Speaking of grant managers, Lieutenant Hart?
Yes, so for Tanya C, a couple of questions.
Yep.
One is, besides stabilization and free cash, what other areas can the city take from to pay off the deficits? And two, at the end of the year, if a department has a surplus, can the department head request the balance of that surplus budget to offset the deficits?
That would have to get voted by the council. You change the appropriation for that money.
So would that, is that better for the city to pay off the deficit, or is it better to take that surplus and apply it to the general fund?
Well, the surplus ultimately flows through to free cash, which could then be voted. It would just be a matter of timing in terms of you get it taken care of before year end, as opposed to closing out the excess in the fund, hoping it flows through to free cash. You would get hit on your free cash for the deficit, and then you would have to appropriate from free cash to cover it. So it's really a preference of the city, I guess, on whether or not they wanted to do something like that. I don't think I've ever seen that done, but it's not unallowable if it gets voted that way. You would just move the appropriation from public safety to a transfer out, and Tanya would book the transfer if it got voted and approved by the council. You asked a question before that though, and I'm drawing a blank on it.
Yeah, any other areas to pay off deficits besides free cash and stabilization?
No, not that I can think of, because all your other grant funds are technically restricted for whatever purpose those funds were for, and there's really no other funding source I can think of that would be used.
Okay, thank you.
Yeah, you're welcome.
Daniel, one of the items of deficiencies was under COVID, the FEMA for $186,943, with a caveat that DOR is going to offset that. Can you just explain that for us?
Oh, yes, the fund that is FEMA. Oh, on my spreadsheet, that's what you're looking at, right?
Yeah, I believe so.
So the way, and I don't have that in front of me right now, but the way that happened was, the city was allocated a certain amount of CARES money for COVID-related costs. And then ultimately the Department of Revenue said, well, you should apply to FEMA first to see if they'll pay for a portion of these costs, which the city did. But of course, you're spending the money in advance of requesting the reimbursement from FEMA, and FEMA just takes forever to process, and they require a large amount of backup documentation. And then, DOR said, whatever FEMA doesn't cover, we'll cover with the CARES. Like if they don't cover it, you can come back to us and basically request the money from your pool of your CARES money. So what they did is they netted those. The city set up separate funds in the general ledger to track those costs, what they were submitting to FEMA and what was still kind of staying in the CARES fund. But DOR allowed you to net the positive and the negative number together, so you didn't get hit for the full negative number on the free cash. So they were just giving the cities and towns a break on that. If you had a deficit, it was offset with a surplus that was for the same purpose, even if it wasn't 100% related grant wise.
I thank you for the answer, and this is similar to the schools being in receivership. The CARES Act and the FEMA money, the city council has no say whatsoever over it. It's governed under the mayor and the mayor's designees. So it's another frustrating area where free cash is impacted and we have no say over it.
Yeah.
Now let me ask you a question, because this is where I've kept up with you all night. Believe me,
Okay.
that's a layman. You know, maybe chairman of the finance is a little overrated. A layman's, approach to what you're saying, and I appreciate it. Like Councilor Leahy said, everything that you brought to the table this evening. But I don't agree with what Lieutenant Hart was saying, but I understand what he's saying, and understand that we have to at some point wipe out some of these deficits. But if the deficiencies that you, as the outside auditor, is noting and giving to the Department of Local Services, are having an impact on what would be free cash, how do we get to a point to use free cash to wipe out the deficiencies if the free cash isn't there for us to use?
Well, Tanya's doing, like she said, research on figuring out whether receipts got misposted, which, DOR doesn't look at the surpluses in your various grant accounts. So you could have a surplus of $150,000 in a grant account that really shouldn't be there, but nobody's really done the research on that, and it should be in a different fund. So just making an adjustment from Tanya's side, clearing out those deficits, that will resolve some of those. And that's really, we've been making that recommendation for years that somebody should review the capital project funds and your special revenue, your grant funds, and nobody's really had time to sit down and do that. And now that Tanya's doing that, I think you should see that number go down. I mean, that's one aspect of the free cash calculation. The other aspect is, as we were talking earlier about, just trying to budget as conservatively as you can on the expense and the revenue side. Make sure that the sewer fund itself, the rates are high enough to cover the costs in those funds, so you're not continually subsidizing that fund with general fund money. I don't know if you've the management letter. I mean, there's like millions of dollars over the years that have had to get put into the sewer fund from the general fund because there was just not enough money in that fund. And if that never went to the sewer fund, then, you'd be looking at $3 million, $4 million in free cash. So just things like that, trying to make little improvements to kind of every aspect of what flows into free cash.
When the sewer fund, when the sewer wastewater treatment plant was built, and the sewer rate and the sewer budget was set, it was not an enterprise fund. It was voted upon somewhere, I believe, the 90s to become an enterprise fund. I sometimes think we're better off, disconnecting it from the general budget and forcing it to operate on its own. Do you have any thoughts on that?
Well, I mean, it is in a way separate from the general fund budget. I mean, it operates in its own separate fund in the general ledger. You set the budget as part of your budget process, but it's meant to operate like its own business. So, but ultimately the responsibility, it is a part of the town. So if it runs in deficit, the rules are, DOR says you need to raise that deficit, which is why you had to raise $1 million this year and fund that. Or if you end up short, you have to continually put money into that, because you can't just run it into the ground. It's supposed to operate like a business. And
if the water department, is running in the red, they raise their rates. If the gas and electric is running in the red, they raise their rates.
Yes.
So the problem with the enterprise fund is the sewer department doesn't raise the rates, which is the city council's responsibility, even though they're running in the red.
Right.
And it comes out of the general fund.
Exactly.
Because it's enterprise.
Right. And it's been some pretty big hits over the years. So
real big hits.
Yep.
Yeah. Councilor Lacey.
Thank you. So I have a question, like, given that stabilization is one, revenue source that we can use to sort of pay off the deficits that we accrue. Do you think that we're at a point where in this year, like, I hear that Tanya, our auditor, is working really hard to identify ways of closing up, like doing the research to close up these deficits. Should we, at this point, use a one-time transfer to close up any remaining deficits, so that we're not hit with the, with the deficits coming out of our free cash? And then additionally, if we did, through some discovery, identify where those gaps and deficits were from previous years after we had already made them whole with a stabilization transfer, for example, would those go back into our general fund if they were discovered?
They could, or you could move them back into stabilization. That does happen periodically. Seen that for different reasons. Like if you vote to spend $200,000 out of stabilization for a truck and it only costs 197, whatever, like the residual ends up back in the stabilization fund. I personally think that would be a great use of stabilization fund money. I don't think it's going to be a large chunk of money, by the time Tanya gets done reviewing it. But if you get, if she resolves the majority of the big ones and these other ones have had the same deficit for 4 years and they're just, a couple hundred, a couple thousand, here or there, it's up to the council. But I think that would be a good use of funds to clean up a lot of those and just, be done with them and kind of move on. Because otherwise they're just going to continue to be there. So.
Great. Thank you so much for that.
Yeah.
It's, the final vote is up to the council, but unless the mayor initiates it, we have no say in it.
Right.
Any other discussion?
Yeah, Mr. President,
Councilor
Mr.
Green.
Chairman. Yeah, just quickly, the other factor too probably would be uncollected funds from the sewer, the people that owe or companies that owe. There's probably a lot of money that's outstanding there that adds to the deficit as well. So I don't know where we are with the collection, that part of the whole situation.
Yep, no, that certainly
Is there
plays into
any
it.
comments on that, or?
We do look at subsequent receipts for some of your large sewer billings that come in after year end, and DOR does allow us to accrue that back. We typically don't look at the individual taxpayer level, and DOR is really not, they don't want to be, they don't deal with that, I guess, on that kind of a basis. But if there is, I know there's some sewer billings that go out right around year end. We usually kind of make an adjustment for those and look at those as part of the year end close process and submitting sewer retained earnings to DOR. So they do consider that.
So there's not a substantial amount of funds that are out there that are owed the city from users, from water users and sewer users.
I don't remember what that balance looks like right now from pulling together the free cash calculation for 2020. I know, just generally speaking, everyone's receivable balances are up thanks to the pandemic and the delayed in receipt collections and stuff like that. It's certainly something we can look at and kind of work with DOR on as part of that process, but they don't usually let you accrue that back because you'd have to factor in last year's late receipt too, and it would just be quite a process there. From the city side,
Okay.
in terms of trying to collect those, that would definitely be a thing to do. I wouldn't wait till you get to the end of the year and it's part of the year end close and DOR's review process to push that.
Yeah, I understand it's very hard times out there too with what's going on, in the state and in the community. That these problems are probably exacerbated by the COVID-19. But I think it's all part of the process that we need to do. We need to tighten up our belts. We need to, and I haven't heard anything about reducing spending too. I think somewhere we have to find a way where we have to reduce our spending with the city government to to somehow balance the budget in the future. At any rate, thank you. And thank you for all the important information that you're giving to us tonight.
You're welcome. Hopefully we can do the 2020 presentation much sooner than we're doing the 2019. So, yeah.
Is there any further discussion? I see none. I'd just like to say Tanya, number of department heads that have joined us, some quietly, but are here to learn, to listen and learn. As always, your presentation, I gave you credit for 10 years. It's been 15 years you've been with us, more or less.
15 years I've been with Melanson, yeah. But,
Here.
I know.
Thank you for joining us this evening. We greatly
Thanks for your help,
appreciate
Tanya.
it.
You're
And thank you
welcome.
for working with DLS for us, and hopefully we can keep in mind the collections are off on the sewers, and that they give us DLS gives us a little time to rectify that before we start looking at the rate again.
Right.
Councilor McGivern, I'll make a motion that's been complied with.
A motion has been made and seconded that item number 2 has been complied with. Is there any further discussion on that? Are all those in favor?
Just thank you to Tanya.
Good job.
Great job. Thank you
Nice
all.
to talk to you. Have a great night.
You
Have a
too.
great night. Thank you.
We'll take
Good
one
night.
final motion.
Motion to adjourn.
Motion to adjourn. Let's not debate it. All those in favor?
All right.
Aye, here.
We stand adjourned. Thank
See
you
you
all.
tomorrow night.
Have a good night.
Night,
Everybody have a
everybody.
good night now.
Good night.